NAT earnings is out. Q1 2020. Why are the stocks still not going up? I don't understand why. So stick with me on this video. I'm going to explain to you why the stock is still not going up. Hi, welcome back to Family Investment. NAT, Nordic American Tankers Q1 2020. Amazing earning just went kaboom. Beautiful, beautiful numbers, beautiful figures, great dividends. But still, you're all asking, why is it still not going up? Why is it low? Why is it below 5? Why is it 4? Why is my hair like this? Why is my hair like this? Look, if you realize that, yeah, there was a bit of a disaster. I confessed to my wife, as you all know previously, my wife didn't know I've put in so much money on NAT and I've lost about 40%. Telling her that when confessing when I was having a haircut while she was trying to cut my hair. Maybe I should have waited for her to finish the other side before I confess. But hey, it's a mistake. Everybody makes mistake, okay? Everybody makes mistake, and all I have to do is just cut this side. Oh well. Alright, let's get back to business. In this video, I'm going to cover 3 key sections. So the first section is I'm going to quickly run through the earnings. And secondly, the concerns and why is it not going up. And thirdly, most importantly, for you viewers who've already bought or not bought NAT shares yet, 4 actions forward that I'm suggesting to you and what you can do to make a good decision. To hold, buy or sell, because that's the whole point of you watching my video today. Is no point telling me what I do, but it's the whole point of what we all do, because we all still believe. I'm going to spend 2 or 3 minutes running through the earnings. I'm not going to speak too much because there are other YouTubers who can speak about 20 minutes about it. It's literally just 4 pages long, and there's only a few points that you need to know from the earnings. It's not the most laborious earnings. Basically a boat, put oil, leave it out there, people pay money. That's the business. That is the business of NAT oil tankers. Simple as that. I don't see the need of talking more than that. So net profit 39.5 million against 12.7 against 5.6. The 3 different quarters. So basically, conclusion is net profit, just net profits, not sales, net profit. They're making a lot of money. Great sales expected. And secondly, increase in dividend. As you know, I mentioned in my last video as well, they've increased in dividend. They're paying 0.14, so they're paying 14 cents a share. The point number 3 that I'm really annoyed is the CEO went on Jim Cramer's show and said in his own words that his boat costs $70,000 per day.
For a nice one. Give me a Suez Max. How much a day?
Well, it will cost you $70,000 a day.
But what I was disappointed is he should have just said that, you know, the rental spot price of his ship was 50k, not 70k. So something is a bit not joining up, and one of the reasons why anybody reading this thinks that there's a bit distrust that people do sell based on the difference in the words. Okay, then point number 4 is 23 Swiss Max ready to go out. So he compared himself, Swiss Max and VLCC, very large crude carrier. His company holds Swiss Max 1 million barrels on his tanker. So what he's saying in that point is all 23 ships are out. I own 23 ships and 23 ships are out. 75% have already been booked up. They're out there serving people, 25% more to get service. So what they're saying is all the ships are healthy. Okay, that's for the earnings, but I've got 2 concerns regarding the earnings. Peak oil demand. So the peak oil, 100 million barrels of oil per day, which Total, Shell and BP's CEO says that the peak oil is over. We've reached a peak oil. I think from here we're going to be declining because people are going to be using more renewable energy. It looks like potentially NAT might be buying more boats when the peak oil demand has passed. So that's one of my concerns. He's slowly paying off his debt, making his cash flow looking good, and it looks like he might buy more boats. And the second concern that I have from the earnings report that I don't see is the keyword is buyback of shares. So if companies with great cash flow, if he claims he's lowering debt as he claims on his report, why is there no hint about buying back shares? Remember, 70% of NAT is owned by public shareholders. Only 30% is between institution and also personal holdings by the board. 70% is held by public shareholders, and then, you know, a small amount of volume within that 70%, it will just go up and down, really make it really volatile. So he needs to buy back more shares. He needs to bring in more command of his own shares. That's what he should be doing, but I have not seen anything like that. But perhaps he wants to raise more money and buy more shares. So that's one of my 1 and 2 concerns. So now the key point, why is it not going up? Like I said, the Q1 earnings is only a snippet of what's here to come. Like I said before in my previous video, I'm going to repeat it again. It's going to be the Q2, Q3 earnings before we're going to see a nice juicy profit, a nice juicy dividend. That's when you can start attracting people to come and buy their shares again. And then again, the second point is lots of pump and dump. Lots of people making quick profit there. You know, the quick profit came in the region of, looking at my graph, of people, lots of early buyers that came in around about, you know, the $3-4 mark. Everyone's making profit. Everyone's taking quick profit. Thirdly, it is a dividend stock. It's not a growth stock. That's what disappoints people. People think that they're going to buy, it's going to go up $15 immediately. No, it's a dividend stock. And yeah, so that's my key point. Why is it not going up? But let's go on to the chart analysis. No point me speaking all day. Let's go on to chart analysis to see where we are going to be forecasting. You know, look at the RSI and the stochastic indicator. So on the RSI and the stochastic, okay. So if you look back at the just after Christmas when it hit its high and came back down, and you can actually see back in January when it's on a huge sell-off, January, February, March, it's on a huge sell-off, and then after that it picked up in March. You can see on the stochastic indicator, the big oval, it's below 20. So that's the it's been oversold, and you can coincide with the RSI around about February period. It's been oversold, and then after 4 weeks it starts creeping up. And then creeping up and creeping up. That's when we start hitting our volume high peak. So from there, we are seeing that low stochastic level at 20 again. This is where we are just now in May today. So now it's way oversold. But it doesn't mean that it's going to just jump up. It might last for another 2 months to 3 months because it always coincides with their earnings. So now we're talking about in August, the next earning in August, before we're going to see any significant bounce out due to the greater profits it's going to be bringing in for the next Q2 quarter, or they're going to possibly head back up to, I think it might possibly look up $6.5-7. Then if they don't grow the dividends, if the debt starts reducing, they use the money properly, and I see potential back up to 6.5 to 7. And if you look at the chart, will it go further down? I think there's still potential for it to drop. We're sitting about just under 4.5. It went as low as about 4.2. So potentially it could still go down. It could still go down. Me marking it on the chart here, it still go down to 3.6 or 3.2. If you see the floor, 2 different floors level, it could still go to as low as sub 4 level. So be careful. And if it does go up positive, it could go at 5.7, 6.4 level. So this is where we are with trying to put support levels, is what we see, the buy and sell point, the popular trend point. So it could go up, it could go down. Nobody's got a crystal ball, but this is what the indicators tell us. So the next key part is action for investors. Now you want to know what are your options. Earnings seems to be stagnating the share price or pushing it down. What are your options? So here I'm going to give you 4 points, 4 key points. So pick where you are, and these are my 4 key points to deliver to you guys. So the first one, new investors. Should I buy new investors? Yes, looking at the chart that I've shown previously, it's on the buy trend. So at 4, between 4 to 3, it's a good buy because potentially it could go back up to 5 or 6. From 4 to 5, that's a good 20%. From 4 to 6, it's a good 33%, 33.5%. So if you want to come a quick profit, it looks like it might swing on the way up. You came in the right time, but then it's a volatile stock. Okay, for you new investors there. But then if you're in for the dividends for the next 18 months to 24 months, or at least 8 payouts because they paid quarterly, stick with NAT. It'll be a good one. And providing you know how to diversify your portfolio. Okay, and the second one, Second group of you guys, most of you guys returning, watching my videos again, thank you very much. Existing investors, you guys, existing investors saying, it's low just now, Alex. Should I buy more? Should I average down? I say, yes, if you can afford, of course you can. You should buy more and average down, but you have to be aware of your portfolio diversification. Don't put all your eggs in one basket. Make sure that you are diversified. And for me, I did release a video on diversified portfolio. And if you check this video out, but then it's the chart that you need to look at. The chart here, the chart that you need to look here. For me, it's a pyramid diversification. For me, NAT is a high risk. High risk meaning that I'm not going to spend more than 10% overall on NAT on my overall portfolio. If you're going over 10%, then guys, I think you're buying a bit too much of an NAT. This is like a speculation high risk portfolio. Speculation high risk stock. So don't go all in. Go all in if only you can afford when you have a diversified portfolio. If you're not diversified, then don't average down. Okay, do not average down. There are plenty of other fishes in the sea. This boat might not be the one for you. You will have other better stocks that you can buy to diversify your portfolio properly. Okay, and the next one, number 3. If NAT is not a growth stock, it's a pure dividend stock, when do I get out? How do I do it? So this is a little table that I've brought up. This little table, I've broke it down to people who have averaged between 4.5, 5, 5.6, all the way to $8.5 a share. So if I've done some smart calculation here, we assume that the CEO will pay us a dividend of 14 cents every quarter, okay? Like what he's going to be paying us in this last quarter he paid us. Assume that it's not going to grow this quarter, but I think the dividend will grow, by the way. So assume that he's paying the same dividend. So every year we'll receive about 0.56 cents a share that we own. And if you hold it for 2 years, we will double that. So I made a simple chart to say that if you receive 2 years of dividend, you're not buying anymore, 2 years of dividend, and you look at what average point you are. Let's say, for example, you average about $6 a share. You got 2 years of dividend, you hold it up for 2 years, and then if you hold it up for 2 years, and if you average it all up, if you mix the basket and average it all, at the end of the 2 years, your average should drop to 4.88. That's how this table shows. So if you bought your shares at 8.5, and then you hold it for 2 years dividends, which you got the last one, and then another 7 more dividends, then your average should drop to 7.38. Okay, that's how you see it. So at the end of 2 years, if you sell it off, it depends on where the price is. You can just the price in the future minus what it's your average. So you need to do a bit of forecasting for yourself, assuming that the dividends stay the same. But if the dividends do go up, obviously average price will come down. But this is an indicator, or if you hold your share for 2 years, this is what you will be getting. So remember, dividend shares can be quite lucrative, okay? But people don't seem to explain it properly. Today, I hope this chart will explain. And if you want a copy of this chart, go on my Facebook. I'll try to put it on my Facebook as well, and one of my wall posts. I'll click it there, and you can just look at a bit more detail, okay? And finally, the fourth point. The fourth point is, if you're one of those, if you guys are not feeling comfortable up there, so you're getting restless sleep, you're watching it every day, you're getting stressed out, you're not happy about holding, it's not good for the heart, then do the risk transfer. I mentioned this in my last video, but I'll do a bit more detail, okay? I'll give you guys a bit more detail so you can risk transfer this, okay? So I make it down easy. If you've made 10% loss and you can't handle it, you want to leave, then risk transfer it. Sell it off. Go to the likes of Microsoft, GSK, Unilever, because this company still got 10% potential rise until end of the year. Microsoft, GSK, Unilever, they pay dividends as well. So just go on these bigger companies and less volatility, and then this company is not going to go bankrupt, and this company will be there for a long, long time. So 10% loss, go there. If you're making 20% loss, if you sell out, then try the likes of Berkshire Hathaway, Goldman Sachs, Morgan Stanley. And then if you're at 30% loss, what shares can you buy? I will go Disney or VMware. Again, great companies. If you're down 40%, Alex, what do I do? Well, no, we're digging a bit deeper hole there. So, I'm here to help. I'm here to help, guys. 40%, then do looks at Total or Chevron, okay? I'm not calling anybody else. I said Total, France company, Chevron, American great oil company. 2 oil companies. They're still paying great dividends. low liabilities, great earnings from a week or 2 weeks ago. Great earnings. I see great future for these two oil companies compared to the rest of the losers. Oh. So if you're making 50% loss, you bought at $8 and now it's at 4. What do I do, Alex? Oh, I don't know. I can't sleep. I'm here to help, guys. I'm here to help. Risk transfer. This is not gonna work 100%. I'm trying my very, very, very best here. You can go for the likes of the 2019 IPO great companies. Uber, Pins, Lyft. These are the 3 companies I can think of: Uber, Pins, and Lyft. If I do think of any more, I put it up in the comments below. But Uber, Pins, Lyft, there's potential to grow, but don't expect it to grow by the end of the year. You know, it might be a 2-3 years. So if you're worried that NAT might do something drastic, then try Uber's, Lyft, Pins, and Lyft. I'm just saying that, you know, you're just moving away from oil. So this is a chart. Again, I will put it on my Facebook for you guys to print out a copy for yourself, to consider, speak to your partner what you need to do. But make sure the partner doesn't cut your hair like this. Actually could look quite nice at this side here, just not this side. Anyway, yeah, so actions forward for the investors. So 4 points that I hope you find it useful. So what am I gonna do? I will try my best to take as much dividend as possible, keep the company going, keep the tanker going, and if I really need to wait until, I need to hold out until end of the year before I know. So, you know, all I know is it's making profit, it's making good money. It's a straightforward business. Even a fish can do this maths. Even a fish can do this business. You know, I don't see any other companies making money besides the likes of Netflix, the likes of Microsoft. But then the likes of Netflix and Microsoft are not going to double my money in the next 18 months time. So, or pay me great dividends like NAT, or growing dividends like NAT. A risky company that's making money, rather than trying to buy an airline or a bank business, which I know they'll be making losses. So this is where I am. I'm still feeling comfortable because it's part of my high risk portfolio, as long as I make sure that my base is strong. So that's me. That's me. I hope you find this useful. I hope you can make a decision what you are going to do. But if you're still holding the stock like me, then go on the comments below and go still believe. Leave your comment. Anything that I can help or share. But there are other. And I noticed there are other really good viewers as well. They're also helping and commenting and sharing the information. So it's a great club that we're in here, and I'll try my best to provide information as much as possible. So have a good day, guys. I better go and speak to my wife nicely. Maybe do the dishes and mop the floor tonight. Clean the 3 toilets in the house, and also maybe she can get rid of this again. It looks bad, guys. It looks bad. Okay, guys. See you soon, guys. Bye.